like it. Maybe something to get a little bit of a fresh breath outside of this big macro sell-off. I know we can also get a pretty fresh breath. Let's go to Mr. Alan Nuttman. He's the Chief Market Strategist at Agora Financial. He's down at the SIBO. Alan, if you're not buying today, I don't know who isn't.
It is time to trade. Let's get it on. So the risk reward has recalibrated, and there's a lot of stocks that have pulled back, and this is a huge opportunity. What we want to watch is 3,200 in the S&P. So you see so far, obviously we open up lower, but it's 2.5%. Keep an eye on the percentages, not the points. It's 2.5%, and let's remember how far we have come.
All right, I'm going to give you the same question I've been giving all the traders here, Alan, which is the how far we've come story. Does it make you feel better or does it make you feel worse? Does it make you feel like, hey, we can go 3%? It's nothing. Or does it worry you that there's a lot of downside?
I like the fact that we're only down 2.5% right now, and we're holding those lows from a couple weeks ago. So that's 3,200 level support is a super support level. The market traded, when we look at the S&P, traded between 2,800 and 3,000 for 7 months last year. That targeted 3,200 on the upside. We've achieved that and exceeded that. Now that becomes a super support floor down below, but on a weekly basis. Let's look around the world. You talked about the DAX and the FTSE selling off. But look what's happening in China. China's down 0.25%, and Japan's down 0.25%. So not much happening there. So there's a lot of positives that I can look at. The VIX is above 20 for the first time since October, but did not make new annual highs and is nowhere close to the highs that we had in December of 2018. We were at 35. So let's see where we are in the next few sessions. If it gets whacked back down below that 20 pivot, then we could be in the same situation we've seen many, many times. People buy at these bargain levels.
Alan, it sounds like somebody's doing something there behind you. We're at down 2.75% right now. Becoming this year, coming into this event, we had the Tina trade come roaring back, the everything rally, stocks, bonds, right, gold, expectations of cuts. The question now, as I see it, is that regime going to change on the other side of this coronavirus event? What do you think?
Well, you're seeing rates go straight down. So again, the choice, when people step back and think about what's going on, you're going to get yield in stocks that are going to blow away what you can get in the 10-year note. So it's really not a choice. It's not even close yet. So at this point, I'd be leaning on, as a trader, you want to look to buy at these discounts and lean on levels and see how it responds. But the risk reward is much, much better as a trader, a bullish, optimistic trader, than it was a couple weeks ago, obviously, when the markets were going straight up. There are stocks that go up on days like this. Look at Gilead. Gilead was up 5%. So that's a stock I talked about last week. There's always stocks that move up and down markets, and always stocks that move down and up markets.
All right.
So it's about that stock selection and using the right strategy so that you can ride through some of these ups and downs.
Hey, I'll tell you what, in a market paralyzed by coronavirus fears, Gilead trade, that's an awesome trade right now. Alan, the question that everybody's asking, because they're working on a potential vaccine, markets are loving it, nailed it. Right. Here's the question everybody wants to know, Alan. If the Fed is going to come to the market's rescue after bonds and stocks were rallying together, if the regime doesn't change, and the reason to buy stocks is because of bond yields, the Fed model that you're describing that's been working, if the Fed does cut again after 3 cuts, and that's our reason for buying stocks, are we going into a bubble, Alan? Are we there? Is this the first step? Do we just melt and melt until it blows up?
Money has to go somewhere, all right? It can't just sit. It's not just going to sit on the sidelines. It's going to have to flow. It's either equities or treasuries. That's the equation that I've been taught since a young trader. And so what we can look at here is that you're seeing stocks sell off, and obviously bond prices rally and interest rates go down. I don't see it being any sort of choice, and there is a high percentage chance that the Fed's going to cut rates and continue to do stimulus. Let's think about this man's personal interests and what he wants, and he usually gets what he wants, and so the Fed's going to act accordingly.
All right. Just to clarify, the man, you're talking the president, presidential pressure. Let's not beat around the bush. That's what you mean, right?
Exactly, the boss.
Hey,
the Fed's boss has his thumb on the scale. There's no question about it. He doesn't pretend that it's not the case. Everybody knows that there's a put in place for the stock market to get this guy reelected.
That's one view. That's a fine logic. Let's be clear. When the Fed was cutting, the Fed was cutting last time, Alan, when the global economy was getting some pretty bad PMIs. We don't know that it was all Trump, right?
I'm gonna stick to my premise. We don't have to talk politics. I'm a price guy. I'm not. The markets don't care if you're Democrat, Republican. I don't care.
Right.
It's about the price action. And until we made all-time highs just 3 days ago. Please, 3 days ago, all-time forever highs.
All right, give me a Micron trade. You want to buy on this dip?
Yep. 50 is a huge level of support. That was the breakout area. So it's been trading between 50 and 60 now for the last 2 months, leaning on the 50 level, buying the 50 March call. This is a stock that had been up, straight up. Now it's brought back down to earth a little bit. Look to buy at these levels. The $50 call for March is trading about 6, and we're trading at 55 right now. So it's $5 in the money. It's got a delta of about 75 or 80% a month at a time. Look for this stock to recover and lean on that 50 level of support. This stock is down more than 10% since its highs just 2 weeks ago. So from a risk reward, this is the time as a trader, if you're bullish, to step up and buy, see how it reacts, and see how we act around this 50 level in the next 10 days.
All right, and you're a grade A bull, Alan Nuttman. I love the conversation. You're picking up what I'm putting down. I appreciate the energy on a big day. Alan's the Chief Market Strategist at Agora Financial. He's down at the SIBO. We'll be right back. Let's get some more thoughts on the market. It's got a lot going on. We're going to continue to try and break down what the logic is here, what makes sense, where we go next. Is it business as usual?